After the stellar up move that the stock of Tata Motors saw in yesterday's trading session, in fact, the stock had been gaining quite smartly and with a tremendous amount of resilience for the last 4 sessions, 4 consecutive days. There seems to be a bit of a halt coming there to the gains of this counter. The stock is one of the top laggards on the benchmark Nifty 50 index today. In fact, as we speak, it has already lost more than 2.5% in trade. While yesterday we flagged off a couple of notes, one coming from CLSA, which was rather positive, but on the flip side, you had JP Morgan that maintained its underweight rating with a target of 90 rupees a piece, and essentially what they had flagged off in their as part of their note was concerns over clarity on the deleveraging roadmap for the company. Now today, even UBS has come out with a rather cautious note on the company. They maintain their sell stance on Tata Motors. The target price that they have given is 100 rupees a piece. A couple of reasons that they have flagged off in their note today. They continue to hold or rather maintain their sell call on the counter as JLR continues to lose market share in the key SUV segments in important geographies across the world. Specifically in China, the underperformance also continues, so they are a bit worried about that. They believe that the lack of product pull could, in fact, over the medium term to long term, could lead to higher discounts and lower volumes, which could perhaps offset the management's cost-cutting efforts, leading to a disappointment on the free cash flow front. Now, do remember, the company over the last many quarters has put together a very aggressive plan, a very aggressive strategy to turn around the company's position, not only in terms of financials, but in terms of their free cash flow availability as well. And one of the silver linings, or one of the good news yesterday, which was pulling the stock higher, was the fact that they had turned FCF positive in at the end of the September quarter. But that continues to be a concern according to UBS analysts. They think that JLR cannot afford, high discounting and low volume situation given their leveraged balance sheet. They expect India FCF also to remain negative even in FY22, despite building a strong truck recovery. FY22 is essentially when CLSA was saying in their note that they could turn FCF positive for the overall numbers for the year for Tata Motors, but UBS on the other hand is concerned that India FCF will still continue to be negative even in FY22 after factoring in a recovery for the truck segment. They've also flagged off some key risks as well in their note. Firstly, sharp appreciation of the British pound versus the USD, sharp slowdown or decline in China sales for JLR due to regulatory or economic reasons. Now, of course, we've seen some pickup on a sequential basis for China and for markets like UK and North America, but UBS analysts still seem to be a bit concerned about, or rather they're just flagging off the key risks going forward at this point in time for JLR and for Tata Motors eventually. And an inability to refinance debt and turn around the India business, that again is a key risk according to the analysts at UBS. So let's see how things play out, what the management commentary is like. The numbers will also come out in a couple of weeks from now on, but yeah, the stock is reacting a fair bit to the cautiousness flagged off by key brokerages, JP Morgan yesterday, UBS today, down 2.5%.